Hey everyone, welcome back to Corporate Decoder. Today we're diving into Willis Towers Watson's recent filing, and it's packed. Seriously, you might need an extra cup of coffee for this one. We're going to try and make it simple. This report is all about their upcoming shareholder meeting, what's on the agenda, who's running the show, and most importantly, where the money's going. We'll break down the key proposals, executive pay, and what it all means for investors. Alright, first things first, this is a Schedule 14A, a proxy statement filed with the Securities and Exchange Commission. It's basically the invite and guidebook for Willis Towers Watson's annual shareholder get-together. They want your vote on some important stuff. Mark your calendars for May 15th, 2025. That's when the annual general meeting happens, live from Ireland. If you're a shareholder as of March 17th, 2025, you get a say. You can vote by mail, online, phone, or even show up in person. This report got mailed out around March 28, 2025, so you should have plenty of time to review it. So what are you actually voting on? There are 5 key items on the agenda. First, they need you to elect 9 directors to the board. Then there's an advisory vote on ratifying the appointment of their auditors and a binding vote on how much those auditors get paid. Shareholders also get a non-binding, meaning advisory say on executive pay. Finally, there are 2 proposals related to issuing shares under Novish law, one asking for the authority to issue shares and another to opt out of preemption rights, meaning existing shareholders get first dibs on new shares. Let's get a quick overview before we deep dive. Willis Towers Watson calls itself a leading global advisory, broking and solutions company. They're in the business of helping clients turn risk into opportunity with about 48,900 employees in over 140 countries. The board has changed a lot recently. Since 2022, 9 new directors have joined, including a new CEO. It looks like they are trying to freshen things up a bit. I previously had this group called the Operational Transformation Committee, but its mission expired at the end of 2024. This group focused on saving money by making the company better, more efficient. They claim to have exceeded their original cost-saving goals, so it looks like the program was successful. Instead, they are creating the Risk and Operational Oversight Committee. This group will keep an eye on all the dangers related to their operations, like hackers, technology failures, and privacy issues. They're taking operational risks pretty seriously, especially in areas like cybersecurity and artificial intelligence. The board has tenure limits for directors and committee chairs. This is common practice to ensure there is fresh thinking in the company. The company says they are committed to being environmentally and socially responsible. They even have a sustainability task force to manage their environmental, social, and governance strategy. Let's jump back to those voting matters and the board's recommendations. For electing directors, approving auditors, and executive pay, they only need a majority of the votes cast. For the authority to skip preemption rights for shareholders, they need a supermajority, 75% of the votes cast. It looks like they're trying to build a board that reflects the world. Currently, over 40% of their directors are women, and a good portion have citizenship outside of the US. Time for some director highlights. Dame Inga Beale is the former CEO of Lloyd's of London, bringing tons of insurance experience to the table. Fumbi Chima is an expert in information technology with experience at big companies like Boeing and Adidas. She also seems to be a big advocate for women in business. Stephen Chipman has a background in finance, previously serving as CEO of Grant Thornton. The company believes that his leadership experience will provide important insight into financial and risk management. Michael Hammond used to run Lockton Overseas and other insurance broking firms. His management and board experience gives the company great insight in global strategy and operations. Kyle Hess, the current CEO, has spent a long time at Willis Towers Watson. His many years of service gives him significant insights into the company's management. Jacqueline Hunt was on the management board of Allianz SE and the CEO of Prudential UK, Europe and Africa. She has a wide range of management experience and is a chartered accountant, meaning she's a finance expert. Paul Riley is the executive chair of Raymond James Financial. He has significant CEO experience in the professional services industries. The company notes that his international business experience and financial expertise is crucial for global strategy. Michelle Swanbach has led some large digital transformations as an executive. The company hopes she can leverage her technology and operational experience for W2W. Frederick Tomczyk is currently the CEO of CBOE Global Markets, a securities exchange company. The board believes that Mr. Tomczyk's financial expertise will provide significant insight into global management. Now let's move on to governance. They have annual board evaluations and a semi-annual shareholder engagement program. The company is open to feedback. They are also proud that all independent directors other than the CEO are independent, which means there is lots of oversight. The non-executive board chair has many important responsibilities. Most important is that they hold meetings without the CEO, allowing for independent feedback to take place. Here is a breakdown of the board committee. Dame Inga Beale chairs Audit, Fumbi Chima chairs Corporate Governance, Michael Hammond chairs Risk and Operational Oversight, and Michelle Swanback chairs Human Capital and Compensation. Paul Riley and Paul Thomas are on many committees as well. The Audit Committee oversees financial matters. The Governance Committee focuses on board structure and sustainability. The Human Capital and Compensation Committee handles executive pay and talent strategy. And the Risk Committee is in charge of managing risks. Time for some money. Let's break down what they paid their auditors. For 2024, audit fees were $17 million, a little more than 2023. The audit-related fees were around $1.3 million, and they kept their tax fees relatively low at under $200,000. The grand total rings up to $1,000. The grand total rings up to $18.6 million. The report notes that the Audit Committee is responsible for the oversight of financial and compliance risks, as well as risks relating to compliance and internal control matters, tax matters, and pension matters, among other matters. They are asking shareholders to give a thumbs up or down on how the executives are paid. Although the voting results are not binding, the board and the HCC committee will take into account the results of the vote when considering future executive compensation arrangements. Alright, let's dig into how much the executives earn, starting with what the plan is. It's pretty standard: attract talent, reward performance, and align executive interests with shareholder value. They achieve these goals with a mix of base salary, short-term incentives, and long-term equity. Most of the compensation depends on performance. Salaries stayed mostly the same, but the company did mention that Ms. Gebauer, Mr. Garrard, and Mr. Furman got a 5% raise for 2024 to remain competitive. The STSI program is mostly based on hitting financial goals and personal objectives. The 2024 NEOs are Carl Hess, CEO, Andrew Krasner, CFO, Lucy Clark, President R&B, Julie Gabbera, President HWC, Matthew Furman, General Counsel, and Adam Garrard, Chairman R&B. Ms. Clark joined the company in 2024. They outlined some good progress made on their 2024 strategic priorities. Based on the strong financial performance of a company, NEO 2024 STI awards were earned at 11.8% to 119.5% of target. Not bad. Their long-term incentive program, what they use to reward the executives with equity, focuses on annual revenue and profit. In addition to hitting the financial targets, performance is also based on relative TSR, which measures how their shareholder return rates compared to other companies in the S&P 500. The company highlights the benefits that executives receive, including retirement plans and welfare benefits. They have a clawback policy, also known as a compensation recoupment policy, that allows the company to recover executive pay if there's a financial restatement or detrimental conduct, a bad behavior by a senior member of the team. That way the company can take back any compensation earned by those executives. This is pretty important for accountability. Switching gears, let's look at what they pay their board members. Looks like all non-employee directors get a $125,000 cash fee and $220,000 in stock. The non-executive chair gets an extra $200,000, while committee chairs get additional cash fees too, some of which are up to $30,000. BlackRock owns a significant portion, more than 5% of W2W shares. They get paid for providing some services related to pensions. Shareholders who own 10% of the company's shares have the power to call a special meeting. This allows owners a faster option to call for a vote. The company is broken down into two major components: risk and broking, and health, wealth, and career. These are the services that they offer their clients. There are 6 named executive officers, what they call NEOs, in these reports. If they are named, they are important. The executives include Carl Hess, who's the CEO and CFO, Andrew Krasner, in addition to the segment leaders and general counsel. A big portion of the executives' pay depends on how well the company performs. I see here that 22 LTIP performance-based restricted share units were earned at 149.4% of target. The company highlights its operational transformation committee and says that it achieved significant run rate cost savings. They talk about replacing that committee with another to adapt to the needs of the company. The board also discusses sustainability and says that clients expect them to act in an environmentally and socially responsible way. The company does semi-annual shareholder outreach, where they engage with shareholders holding over 50% of outstanding shares. They say they incorporate the feedback into their programs. The board reviews and renews the term of the chair annually to ensure that the chair serves the company's business interests. All directors must attend at least 75% of their meetings. The Human Capital Committee provides input and advice on the implementation of the company's human capital and talent strategy. The board has responsibilities for enterprise risk management. Each of the committees are delegated responsibilities. They have several practices listed, among which include FEO, separate CEO, and independent board chair roles, superactive oversight of company strategic planning, call semi-annual shareholder engagement. Here are some of what they don't do: no excise tax gross-ups in connection with a change in control, no CEO employment agreement, no backdating of share options, and no option repricing without shareholder approval. Based on recommendations, the board has determined that each of the current directors and nominees are independent. Let's look at the responsibilities of each of these committees. The Audit Committee has a focus on financial and compliance risks. Dell HCC Committee is also tasked with evaluating executive compensation, competitive practices, and trends. The Governance Committee reviews government relations and oversee any policies regarding political activity. According to the report, the Audit Committee agreed that the audited financial statements are included in the company's annual report on Form 10-K. The Audit Committee has multiple members, several of whom are mentioned earlier. At the request of the Human Capital and Compensation Committee, WW's compensation consultants completed a risk assessment of the company's compensation programs. There is a compensation recoupment policy where, if things go wrong, the committee has a path to take back what was given to the NEOs, which can give investors some peace of mind. The executives are required to hold onto a decent amount of company stock, so their performance is tied to the stock. BlackRock sold products to Willis Group Services Limited in 2024. To reiterate, the NEOs in 2024 include CEO Carl Hess, CFO Andrew Krasner, Lucy Clark, Julie Gebauer, Matthew Furman, and Adam Garrard. Carl Hess became the CEO back in January of 2022. Adam Garrard formerly served as the global head of risk and broking. Michael Hammond previously served in various senior roles at Lockton, an international insurance broking firm. Jacqueline Hunt served as Executive Director of Prudential plc and held senior positions in multiple companies. Paul Riley was the President and CEO designate of Raymond James Financial, another public company. Michelle Swanback was the President of Product and Platform of the Western Union Company. Frederick Tomczyk previously served as the President and CEO of TD Ameritrade. The company states that they didn't have other transactions that required disclosure. The Governance and Human Capital and Compensation Committees are both involved in the company's shareholder outreach. If shareholders holding 10% of the company's stock want to call a special meeting, they can. The company is asking shareholders to agree to Deloitte and Touche auditing their books. The company notes that since 2021, the composition and structure of the board has substantially changed. The company concludes that Dame Inga Beale should continue to serve on the board due to a previous executive experience. The company concludes that Fumbi Chima should continue to serve on the board due to her global technology experience. The company concludes that Stephen Chipman should continue to serve on the board due to his management experience. The company concludes that Michael Hammond should continue to serve on the board due to his industry experience. The company concludes that Carl Hess should continue to serve on the board due to his appointment as CEO and his years of service. The company concludes that Jacqueline Hunt should continue to serve on the board due to her industry experience and management experience. The company concludes that Paul Riley should continue to serve on the board due to his experience as CEO at a financial services company. The company concludes that Michelle Swanback should continue to serve on the board due to her executive management experience. The company concludes that Frederick Tomczyk should continue to serve on the board due to his experience as CEO at a financial services company. The company states that no fee is required for the filing. I noticed this statement appeared twice in this filing. It must be pretty important. That's it. We got through Willis Towers Watson's filing. Here's my take. The company has made a strong effort to showcase a well-rounded board with recent changes, with the board focusing on risk management, including from hackers and new technology, in addition to an intent to act in a socially responsible way. With that all in mind, it looks like this company is positioned for success. What do you think of Willis Towers Watson's priorities? Are there any major risks you see for the company? Be sure to share thoughts in the comments. If you found this breakdown helpful, give us a like and subscribe for more corporate deep dives. Thanks for tuning in.